Hey everyone, Couch Investor back to our earnings video for today, the second of the night. We already covered Alphabet. Great report. If you missed that video, it's going to be in the top right corner. Pretty short, covering all the major points. Now in this video, we're going to talk about Teladoc. Teladoc, at the time of making this video, the stock is up around 4% because of a earnings beat. EPS was in line, still a big loss. Revenue was a small beat. So we're going to go over all the numbers, the expectations for growth in the next couple of years, and then at the end we're going to have a look at the graph because there is something pretty interesting to see there. First, let's start with some comments from the CEO. So Teladoc Health continues to set the standard for delivery of innovative whole-person virtual healthcare solutions to an ever-demanding marketplace focused on the intersection of quality and cost care. For the second quarter, we are pleased to report strong financial and operating results against all key metrics, including adjusted EBITDA of $72.2 million, exceeding expectations. Now, more on that number later because it has to do with an increase in SBC as well. This performance is a direct result of introducing and expanding new products and services, investing in a robust innovation pipeline, controlling expenses, and vertically integrating care to capitalize on customer demand for unified virtual and in-person healthcare experiences. Now, you all know my opinion on Teladoc. We've covered this company a lot of times on this channel. Tremendous potential, huge total addressable market, but the execution has been lacking for a while. Of course, if you do the year-over-year comparison with regards to net loss, there's a huge difference. So for those of you that haven't really been following the company that much, you might think, wow, the company is improving on the bottom line so much, must be a good sign. Well, last year was the goodwill impairment charge of $3 billion in net loss. Well, it resulted in $3 billion in net loss, so not really an apples to apples comparison. Now, a quick look at Kathy's ARC. So Teladoc sits at the 11th position in all of the ETFs combined. Tesla number 1, Coinbase number 2, Roku number 3. So let's have a look at the financial highlights here. Revenue grew 10% year over year. So again, when you look at the growth rates of this company, even for fiscal year 24-25, as you will actually see right now, it really isn't much of a growth company anymore, right? Fiscal year 2023 expectations are 9% growth, 24 7.7%, and then fiscal year 2025 7.4%. When you look at EBITDA growth, there the story is a bit more different. So 2023, 22% growth, 24, 13.63% growth, and then 25 about the same. So yes, of course, if you look at sales for this year, $2.62 billion, market cap of $3.73, you might say, wow, not that expensive. And I agree, it isn't very expensive right now. But that's because, well, the market sees the lack of execution from management, so the lack of trust, the disconnect between reality and what this company might actually be is still quite big, and I think we're going to stay like this for a while. Now, going back to the highlights, second quarter adjusted EBITDA, like the CEO said, $72.2 million. That's up 54% year over year. When you look at fiscal year 2023 revenue outlook in the range of $2.6 to $2.67 billion. And for Q3, revenue outlook in the range of $650 to $675 million. Now, if we look at the graph, of course, year over year, like we've said, 10% growth in revenue, adjusted EBITDA, nice growth there as well. If we look at this segment, as always, BetterHelp is the one that is growing a bit faster than the rest. Integrated care segment revenue, really not that consistent, right? If we look at Q4, Q1, and Q2, Q4 was a good quarter, Q1 not that great, and now a reacceleration of growth in Q2. If we look at the adjusted EBITDA, same story there, up, down, up, down. For BetterHelp, we are going up and up and up. But if we look at the adjusted EBITDA there, same thing, inconsistency. You're up in Q2 2022, then you're down, then you're back up, then you're down, then you're back up. Again, consistency is key. And in this case, for Teladoc, that has not been the case. Now, as always, US revenue is much bigger than international. International is growing faster year over year, of course, coming from a smaller base. If we look at the key operating metrics here, so EUS integrated care members growing, but not by much quarter over quarter. BetterHelp paying members growing faster, of course, quarter over quarter. It's nice to see some growth there, but not out of this world. Average revenue per US integrated care member, again, flat-ish for the last couple of quarters. Chronic care program enrollment, still growing, but again, not by a lot. So right now you're getting my point when I say that this is not a high growth company anymore. It is a growth company, but a company that is growing single to low double digits. So is the market going to give this stock a premium like it did a year and a half, 2 years ago? Probably not. Of course, do share your opinion down in the comments below. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We'll really appreciate that. We're going to cover a lot of companies during this earnings season. So make sure you are subscribed and maybe even click that notification bell so you don't miss any videos. Then one of the most important slides, as always, because of management's promises. So on the positive side here, we can see that adjusted gross margin is increasing. Again, it's over 70%. But if you look at GAAP gross margin, that has continued to decrease, not by a lot, but it has been decreasing, 67.5%. If you look at adjusted EBITDA here, it's the same number we've seen before. And you look at the margin, that's 11.1% increase from last quarter and from 1 year ago. So that's nice, but again, there is some inconsistency here. As for the balance sheet and cash flow, enough cash to survive and to grow. Operating cash flow as well, $101 million, so no real issues there, and remains unchanged, I think, from the last couple of quarters or so, give or take a couple of millions here. As for the outlook, we've already spoken about revenue. Now, again, the big story here, like we've seen with the estimates for the next couple of years, adjusted EBITDA, that's where the growth is at. For Q3, they expect growth between 41 and 60%. For the full year, between 22 and 32%. Of course, remains to be seen when they'll become actually profitable. Right now, still a long way to go. Now, with regards to the adjusted EBITDA of $72 million, right, like I said before, so there is here stock-based compensation. I said before, it's nice to see that stock-based compensation continues to go down. Well, in this quarter, it's actually up $9 million or so. Yes, it is true that EBITDA, not adjusted EBITDA, but EBITDA is much better than the previous quarters besides Q4. Last thing here, and that's a graph on a weekly basis. So the stock has been trading between 22, so the price it was today, up until $32 or so, so a 40% difference there on the upside since October of 2022. So we've been forming quite a nice base here for a while. Right now, yes, the stock is up around 4% or so. I don't think it's going to move the needle that much. RSI isn't oversold, it's pretty neutral. MACD has been positive for a while, bullish for a while. The 200-day moving average is coming down. Again, the market needs to see more positive momentum from the business, more solid execution from the management. And right now, I find it hard to believe that we're going to see this company, well, this stock go up and up and up, well, up 40% to the previous highs that we've seen back in February and back in November. But of course, a lot of things can change at $3-something billion in market cap. It wouldn't be too crazy that suddenly a big company puts in a bid to just acquire Teladoc. It would be funny, especially after they acquired Livongo for a huge amount, goodwill impairment charges, etc. I don't know, could be. It's pretty cheap and you get a good portfolio, so why not? Anyways, that will be it for this video. Of course, do share your thoughts down in the comments below. What did you think about this quarter? Do you still hold some shares? Let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. I'll see you all in the next one. Bye-bye.